Okay. Now this thing, if you've listened to me before, I go over this every single time. So if you've heard this before, please bear with me, because this is important. A market consists of many small retail traders. That's us. These are the retail. There's tens of millions of retail traders in the world, right? And the thing to understand is, when the retail traders are the majority of what's in the market at any particular point in time, in other words, there's no institutions. This is institutions. There's no institutions driving a trade one way or another. We're just in here with other retail traders. It's going to be chop and chaos. You don't want to be trading when there's just other retail traders in there, because you're not going to be able to get any kind of discernible trend that you're going to be able to follow. So this is what we are. This is the institutions. This is what moves the market. Institutions move the market, regardless about what anybody thinks. Institutions drive the market. Now, institutions are made up primarily of investment banks, which is Goldman Sachs, Morgan Stanley, JP Morgan, HSBC. All big investment banks are part of the institutions. They have billions of dollars to put into the market, both trading and investing wise. Now you add to that hedge funds, hundreds and hundreds of hedge funds with more billions of dollars. They also are part of the institutional group. Also is pension funds, which would be police pension funds, fire pension funds, state worker pension funds. All these pension funds, more billions of dollars that can be invested in the market or traded. And lastly, you have mutual funds, which would be T. Rowe Price, Vanguard, big mutual funds. More and more billions of dollars to drive the market. That's what makes up institutions. That's who drives the market. Now, they don't necessarily have to be all pushing in the same direction. They could be, one could be buying, one could be selling. That's not what we want. What we want to identify is when enough of the institutions are pushing a trade in one direction that we can then get on board with them. And that's what the SPY super system tells us. Now, it's important to understand as well that institutions, especially investment banks, have two different methods that they use to trade. They trade with trade desks, which is just a human sitting behind a desk, pushing a mouse, making a trade. But that's not where most of the trades come from. Most of the trades, about 85% of the trades that take place now in the market each day are algo trades. Algo-driven trades, programs that are written to look for specific conditions or specific news in the market and trade based on that. And that's where what we're trying to identify when we're looking at institutions is when they're pushing a stock one way or the other. And those things are very quick. You can't obviously compete with those. If you've ever looked at the market, like when the jobs report came out a week ago Friday at 8:30 in the morning, if you look at the market right at 8:30 in 1 millisecond, all of a sudden you'll see all this volume coming in, either to the upside or the downside. All right, because they read the jobs report, they read the Fed statement, they do it instantaneously, and they start trading in milliseconds around that particular event. So that's what the algos are doing. And when you see that big, huge volume spike that takes place a millisecond after the news comes out, you know that isn't humans doing this. We can't even click a mouse that fast. Those are the algos. Again, they read the news, but they also look for setups. They look for setups that retail traders might take to use for a strategy, like a MACD crossover, for example. They can look for MACD crossovers. They can create the MACD crossover, and then they can bust the MACD crossover. So institutions have gotten fairly wise to what's going on with retail traders, and they take advantage of the retail traders by duplicating what the retail traders are looking for and then busting them after it happens. You know, if you put hard stops in on any trades you take, you probably wonder whatever happened when the hard stop gets taken out, and you had a stop like at $69 and it goes down to $68.92 and then reverses right back up again. The institutions can see where those stops are. They know where the stops are. So if there's enough stops at a particular level, they'll drive the market down there and then bring it back up again, basically taking money from those people who have to close right at that point in time. So that's what they can do. There's a lot of power in these algos. It's important to understand that, and that's why it's important to have a piece of software that it can identify when the algos are pushing the market and which direction they're pushing it. All right, this is a little bit, might seem a little bit off topic, but I bring this in for a reason. This is a ace of spades, jack of spades, couple $100 chips. This is a blackjack game. All right, and so you wonder what is this got to do with trading? Well, the reason I bring this out is if you've ever talked to any friends or relatives about trading, they're going to tell you, a lot of them are going to tell you that it's gambling. All you're doing is gambling. You can't win. You can't beat this. You're just gambling. And the reason I point this out is when I was much younger, I made my living playing blackjack in casinos in Las Vegas as what was called a card counter. Now, a card counter, we're not actually counting individual cards. We're tracking the cards as they're removed from the deck and tracking whether they were small cards coming out, 2, 3, 4, 5, 6, 7, or whether they were large cards coming out, 10, Jack, Queen, King, Ace. And as a blackjack player, we know as a card counter that as the small cards are removed from the deck, the advantage swings to the player. As the big cards are removed from the deck, it swings more in favor of the house. So by keeping track of that, we had a mathematical edge over the casinos by knowing when the cards were in my favor, which I would then bet big, and when they were against me, I would just take the minimum bet. In fact, when they were in my favor, I could play multiple hands. But stock trading, the reason I bring this up is trading stocks and options is very similar to that. In that without knowing what the institutions are doing, the trader has no edge. So in essence, you're gambling. So yes, trading without an edge, without a methodology that can understand what what the institutions are doing, you're gambling. And it is gambling in that particular case, right? And that's what most retail traders are doing. The SPY super system is basically, this is I call my card counting system. This is the piece of software that lets me know when I have an advantage and when I don't. All right, it gives us an edge over other retail traders, allowing us the ability to become consistently profitable traders. This is very important. And the SPY super system, which is the software I'm going to show you, in conjunction with identifying the best high probability trades, can lead to consistent profits. And this is what we're looking for. We're looking for profitability consistently, right? And this is what the SPY super system does. And that's why I mentioned the card counting system, playing blackjack, because there is a similarity there. If you've got a method that you can mathematically know what's going on, you got an advantage in blackjack, you got an advantage in trading. All right, so in the room and on the alert service, I have a couple of rules we trade by. First one is trade the best and skip the rest. Well, this just means the best is the best trades we can find that the institutions are in, and then we take a look at technical analysis and find the best of the best when we take these trades. And skip the rest. This is really important. If you bypass a trade that was going to be a loser, even though it looked like it might set up correctly, this is just as big an advantage as taking a winning trade. Skipping a losing trade is a big deal. And so that's why it's important that we just trade the best and skip the rest. Not as easy to do as it is to say, but it's true. And again, I say this in the room every day. Our objective is not to make trades. Our objective is to make money. The whole point of this is to keep traders from over-trading. Over-trading is one of the biggest drawbacks that most retail traders have. They just are not able to sit there and watch the market for a while. They feel like they've got to be in a trade. And our objective is not to make trades. Our objective is to make money. That's to identify the fact that we're not trying to take a lot of trades. We're just trying to take the best trades that we can find. All right, so maintaining discipline is part of that. Maintaining discipline means you want to learn and follow the process being the criteria that we use for finding high probability trades. Institutions are in the trade. We've got relative strength, relative weakness. I'll go over all the criteria, but you need to learn and follow that process, right? You learn the setups, and that's how you trade. And remain patient. Wait for the setups to come to you, right? It's really important. One of the biggest drawbacks in retail traders is they suffer from FOMO, fear of missing out. A stock comes out of the gate flying in the morning, stacking green candles. They're looking at that and they feel like they're losing money. They should be jumping in, and they typically jump in after it's far extended, and then it comes back against them, and then they got to wait, and they go in underwater. What we do is we wait for the stock. If we find it, identify a nice stock, we wait for it to come back to support level, bounce, go back into the original trend, and then we get in. All right, that's really important. Now you're going to miss some trades like that, but you're also not going to get trapped at the top of a lot of trades. All right, so as a profitable trader, we need an edge. We need an edge over other retail traders. This is our edges, the edges that we have in our SPY Super System trading room, is the SPY Super System software. This is the one I'm telling you about. This tells us whether the institutions are in the trade or not. If they're not in the trade, we're not going to take the trade. We trade relative strength and relative weakness. Another thing that's really overlooked by a lot of retail traders is relative strength and relative weakness. Now, this does not mean RSI. I don't use RSI. I don't use MACD. I don't use Fibonacci. I don't use any of those things. All I'm looking for is stocks that have relative strength versus the SPY or the Qs. So in other words, if you've got the SPY moving sideways and down, and you've got a stock that's stacking green candles, that stock's got relative strength. It's going to increase your edge. And vice versa on the weak side. If the market's going up and you've got a stock that's stacking red candles heading down, you've got relative weakness. Taking trades with relative strength and relative weakness increase your edge over the other retail traders. First of all, they're not going to go against you as quickly as another trade would if the market reverses on you. So that's another big edge. And this is something that's really overlooked by most retail traders. I mean, I can't tell you how many retail traders I've talked to who don't even consider relative strength and relative weakness. We want to trade with the market trend if there is a market trend. A lot of times there isn't. A lot of times it's choppy, but if there is a market trend, we want to trade in that direction. And lastly, buy near support and sell near resistance. This is where I talked about FOMO, fear of missing out, chasing a stock up. Wait for the stock to come back near support. If it moves up, comes down near support, and then bounces back up into the original trend, that's where you want to get in because your stop is going to be very close to your entrance. Same thing on resistance. If you're going to sell near resistance, this goes two ways. If you're going to go short, if the stock is bouncing up to resistance and then turning around and heading down, you're going to enter it. You're also going to sell near resistance if you're in a long trade and you come up to a resistance level in the market. That's where you're going to think about taking profits. So this is the fourth thing, and that's really important. This is what gives us an edge over other retail traders. And I'll tell you right now, if you're able to do this, you're going to be head and shoulders above 98% of the retail traders in the world. All right, and the compass system, which is actually called the SPY Super System now, but it started out as the compass system. And this is a piece of software that runs on Thinkorswim that I'm going to show you. And again, it identifies the highest probability trade setups, while sidestepping setups that look good but will fail more often than they succeed. This is by knowing if the institutions are in there or not. It does this by identifying when the institutions are driving a move and when they're not. And it analyzes some pretty complex trading data. I'll go over some of that with you, and displays the results in an easily identifiable visual format. And to me, this is the most important thing, because if you can take all this complex data and display it on the screen in a visual format, we use colors basically, it's going to make it easy even for new traders to identify high probability trades and trades that aren't high probability trades. And it's going to speed up your learning curve tremendously to actually be able to see what's going on without having to try and analyze it. Okay, so we get an edge over retail traders. We've already talked about this. We only take trades that are being driven by institutions, number one. Number two, trade stocks that have relative strength or relative weakness versus the SPYs or the Qs. And we trade in the direction of the overall market. Very, very important here. This here gives you edges over, like I said, 98% of other retail traders. And how does it give us an edge? Well, our trades are going to be supported by institutional buying and selling. We've got the big boys in there making these trades, these institutional money, the big money coming in. We're just following them. We're just following them and going the direction that they're going. The stocks are going to be outperforming the index, relative strength, and stocks that are moving in the direction of overall market, trading at the trend. That's how you trade these things and have excellent results. And I'll show you those. Okay, there's a SPY Super System software. I want to talk about this a little bit, just so you can understand how critical this is. The SPY Super System software, this is the critical element in finding and trading the highest probability trades. The SPY Super System software is the engine that drives our exceptional results. When you see the results we have, remember that it's the SPY Super System software that's driving this, because this is where we're getting our information from. The ability to identify when institutional players are driving a bullish or bearish move and when they are absent is the key factor in pinpointing high probability trade setups. And that's the function of the SPY Super System software, and it's the critical component in this methodology we've got. This is what drives it. This is what makes us profitable. Okay, just to throw this in, I do a YouTube feed every day about 11 o'clock for about an hour that you can go on and watch. And you'll be basically, you're in the room for an hour and you can see exactly what we're talking about. You can see the SPY super system software. We talk about whether the institutions are in the trade. We look at lots of trades, but you can come on to YouTube and see this every day from about 11 to about 12. It's again, right line trading. All right, now this I threw up here. Now people wonder why I put this in here. The reason I did this is one thing that really frustrates me about a lot of retail traders, and that is they trade stuff that they're hearing about on social media, or they're reading about, or they're watching CNBC or Bloomberg, and they're hearing these things, these people talk about trades that they take, and especially on social media. Social media is the worst. People are putting stuff out there all the time about trades, and people pile into these trades. The reason I put this up here is those people don't know any more than you do about what's going on with the market, all right? And if you follow them, the greatest enemy of knowledge is not ignorance. Not knowing about what's going on is not what's the worst for traders. It's the illusion of knowledge, thinking that you know something that you don't know. And I know a lot of traders that were sure that the market was going to go down after that April tariff thing, that the market was going to crash, and they were going crazy, going short. Lots of people going in short because they thought it should go down. Not that it was going down, they thought it should go down. So again, the greatest enemy of knowledge is not ignorance. It's the illusion of knowledge, which is basically trading off of information that's not accurate. And the only thing that's accurate as far as trading is concerned is what the market's telling us at the time. Okay, this I'm going to just kind of show you the SPY Super System software on Thinkorswim. This is an old chart, but I want to show you what we have on the chart. If you get the SPY Super System software, this is what you're going to get. This is the actual oscillator right here that we use, and it's a Laguerre oscillator, which is a normal oscillator, but we stripped the divergence out of it. This is purely a momentum indicator. Then we have an indicator here called the current time frame momentum. This is very important. This is what the market's doing on the current time frame. If it's a 5-minute chart, this is a 5-minute time frame. If it's a daily chart, this is a daily time frame. And then we have multiple time frame momentum. This is looking across 3 different time frames to see if the institutions are in the trade or if they're not. Okay, and this is the long-term trend. So what we're looking for is red and yellow is bearish, blue and green is bullish. That's what these indicators will tell us. And they change color as the day goes along, right? And notice that on this triple Qs right here, the current time frame momentum, which is 5-minute right now, and on a 5-minute chart, it's gone from bearish, red, switch to bullish here. So if you were in a trade short right here and you saw this switch over to bullish, you would want to get out of the short trade. It's telling you that the institutions are starting to dip their toes back in here buying. All right, this is multi-time frame momentum. This is mostly used on the daily chart. We use multi-time frame and current time frame together on the daily charts for swing trades. If you're looking for a stock short, they both need the current time frame momentum and the multi-time frame momentum both need to be either red or yellow. And if you're going long, they both need to either be blue or green. They don't have to be both blue. One can be blue, one can be green, but you need bullishness or bearishness across both of these indicators. And this is the long-term trend. That's fairly, I think that's fairly obvious. And now up here on the chart itself, where the price action takes place, a couple things. This pink line right here is called the VWAP. Now this VWAP for intraday trades, this is intraday trades where you're taking a trade off of a 5-minute candle or a 2-minute candle or a 15-minute candle. The VWAP is critical because this is the level where the institutions buy and sell. They all use this VWAP. We use this VWAP because the institutions use the VWAP. So this would be a place where we would enter to the downside if it's breaking below it, to the upside if it's breaking above it. Volume weighted average price. Then we use this 15 EMA of an EMA. This is a smooth EMA of 15 exponential moving average. And we use this for our entry and exits if the prices move too far away from the VWAP. So we could be using that here as it comes down to take a short right here, for example. Right, so that's the 15 EMA. The other things we have on here are these little arrows. These are called pop symbols, or pop out of the box symbols. These tell you the stock is breaking compression to the downside with blue or to the upside with pink. And they tell you where compression is breaking. right? So that's important. And this white line on here is called a pivot point. It's not there all the time, but a pivot point is a very strong support resistance level. And we don't trade off of it, but we use that as an indicator. If we're short a trade, we're coming down like we were coming right down here with a short here on the cues. Once we get down to this pivot point, we're probably going to take profits because there's likely going to be some support down here, right? So those are the indicators that are the most important, and we'll see a lot of these. But I just want you to see this again. This is on Thinkorswim. You can get a version of it that goes on Ninja. It looks a little different, but I use Thinkorswim. I do not trade off of Thinkorswim. I trade off of Tradia. You don't have to trade off of Thinkorswim. You can download the Thinkorswim platform and put the SPY super system on that platform and just use it for indicators, so you know which way to trade. Okay, and this I'm going to show you a couple of trades so you can see how this works. This is NVIDIA. This is a trade we took on 8/4 just a few days ago. This is NVIDIA. We took it right here on 8/4. Now you can see the indicators here. Now this was on a daily chart, so I'm interested in the current time frame momentum, which is daily, the multiple time frame, which is 1 day, 3 day, 9 day. And I'm looking these things to let me know whether the institutions are buying. So you can see they've been buying here. They're buying very strongly, right? So as I watch NVIDIA here, my entrance on here was when this pulled back. You see how we did it right to the 15 EMA. See how the stock pulled back to the 15 on the daily, and then it started to bounce. This is where we took the trade. This is one of the setups we call in the room is called a PBO, a pullback opportunity. When a strong stock pulls back to support, bounces off of the support, and heads back up again, this is where you want to get in. Now the VWAP is on here. We do not use the VWAP on the daily chart, but Thinkorswim puts it on there. But this is where we took the trade. You see where it come down? You see how it formed a doji and then it's open green the next day? We took it right here. This is where we get into NVIDIA, and we get out right here on this move up. We took 32% in just those 3 days. Right, so that's what you look at. This is what I'm looking at on a day trade for a swing type trade, and you can see it's easy for anybody to see that the institutions are buying NVIDIA. Really not hard. This was SMR. This was another one we took, another swing trade. Again, you can see the same thing here again. We took the trade. I don't know what that arrow is doing there. We took the trade right here, again on 513. Right here, you notice the compression. Notice the compression. You notice it went from on the current time frame momentum on the daily went from selling to buying right there. Right after earnings. This is where we bought it. Get in and get out on 2 days, 56% profit. The 2,000 invested in the trade would have produced $1,170 profit. And I always use 2,000 as an investment for everything that we do. Not that we take it that way, but that's how I can judge what my results are. I'm always consistently just taking $2,000 per trade on my results that I'm showing everybody. So it keeps it consistent and something to measure against. Okay, and this was Tesla. This is a 5-minute chart. Right, so this is an intraday trade. And here we go. This was open on Friday. You see how we went to blue on the current time frame? Now on an intraday chart, we're only interested in the current time frame momentum. That's it. Just what's this one doing? You see here, it's going to we're buying it right here. This is where I took the trade. I gave it some time to compress. Took the trade right here. It was plenty green, right? Institutions buying, bounced off the VWAP. I took it here and I get out right there. 2 candles, but that 2 candles was good for about I think about $250, $180 a contract on Tesla right there. And this was a trade in the SPY. Now we do this is what we call the SPY super system methodology. This is for the indexes, the SPYs, the Qs, the IWM, futures. Anybody who wants to trade off of a 5-minute or 2-minute chart, this is the methodology that you can use for intraday trades. This isn't swing trades. This is intraday trades. But notice the SPY right here. Notice how it was yellow, selling, and went to blue, buying, right there. And you see how it popped above the VWAP on the 5-minute? This is, as I said, this is our entry on a 5-minute chart. We take the trade right here. As it pops up, we even got a pop symbol telling you we're breaking out of compression. This is where you take the trade. It stays blue. You ride this thing up. Now the VWAP becomes your stop. Then the 15 becomes your stop as it moves away. So as it gets further and further away from the 15, you got to be cautious. You want to take profits as soon as you start to see any weakness. And this is what we got right here. But notice it stayed green all the way over here until you got this breakdown here. So theoretically, you could have stayed in this all this way, but we get out right here as we started to get a little weakness because we had so much profit. All right, so that's how you use the 5-minute momentum indicator right here for intraday trades. A lot of people love to do this intraday because you can take quite a few intraday trades. But for people who can't intraday trade because they have they're under PDT rules, then you can just take the swing trades that we take, which we take a lot of swing trades. Now this was Wendy's. This was a daily on Wendy's. Here's the earnings. We took it short right there. Notice it was buying here, went to selling, was already selling on the multi-time frame momentum. Everything's red. Take it right here. Boom, in and out overnight on Wendy's. So you'll see a lot of these trades. But this I just want to point out that I don't know if anybody's felt like this, but this would be somebody who's trading on emotions. They don't have a methodology to follow. Maybe he jumped into a FOMO trade early. Netflix was shooting up, decided to jump into it, couldn't miss it, and then now he sees it reversing back down again. This is trading with emotion. You don't want to trade with emotion. Try to get as much emotion out of the trading as possible. You can't get it all out because you got money at risk, but that's what somebody looks like. And I'm sure, I know when I started trading, I felt like that multiple times. This is what we feel like. I don't get that excited, but this is what we feel like because we have a methodology, we have a system. We know when the stocks are good and when they're not. We're taking high win rates, 85%, 88% win rate, so we're comfortable and confident in our trades. All right, now the process precedes results. This is something I threw in here. The reason I put this in here is because so many traders look at their P&L and make decisions as to whether they're a good trader or not based on what the P&L is telling them. And you know, you can have bad trades that make you money and good trades that lose you money. The important thing you have to do is learn the process before the profits. Learn the process becomes paramount. So learning the high probability criteria and strategies must come before focusing on your profit. Focusing on results, in other words, watching your P&L and making judgments on your P&L without having a solid process to follow is going to end in failure. I guarantee you that if you're just following your P&L, you're going to be getting out of trades too soon. You're going to be staying in trades too long. I don't even look at my P&L during the day. I'm just looking at the criteria and the structure that we use for our trades. Okay. All right, and this is an OODA loop, just in case you're interested. When you get the video, it'll let you know what it means. It's basically just a methodology or mental process you go through when you're trying to make a trade. It's used by a lot of military folks and also by corporations. But the first thing is observe. For us, observing is watching our scans, our watch lists, and any news to identify any kind of prospects that may be coming out. And I mean news that's pertinent to a particular stock. Orient. Identify whether the prospects meets the high probability criteria on the daily and 5-minute chart. Identify support resistance levels. Know the next earnings date because you don't want to trade over earnings. And check option chains for pertinent information. Right? That's how you're oriented. Now, once you've done that, you make a decision. Decide your decision on whether this trade qualifies as a good high probability trade setup and trade. If it is, act on it. Make the trade. Try to avoid analysis paralysis. Okay, that's the OODA loop, and you can read that when you get the recap. All right, so I'm going to talk about the high probability trade setup criteria that we use, and this is important. Now, this is what I call a trade setup funnel. This is basically a virtual funnel. This is the thought process I go through. So the first thing I do when I look at a trade, if it's going to be a longer term trade, being all day long or overnight, I look at the daily chart and make sure it's bullish. If I like the stock, it's got to be bullish on the daily chart if I'm going to go long. If it's not, I'm not going to take it. I'm not going to trade against the daily chart unless I'm doing just an intraday quick trade, right? So the daily chart and the 5-minute chart need to align. So I find a daily chart, it's nice and strong. I wait for the 5 minutes to set up on it so that it's coming up like through the VWAP or some such spot for an entry. Make those align. Trade with the trend. In other words, if the market's strong that day, we probably don't want to be trying to take too many shorts. We want to be looking to go long. And then this is the key. The SPY super system must align. If you're going long and it's a swing trade, you have got to have the multiple time frame momentum and the current time frame momentum both bullish. That means they'd have to be blue or green. And if you're going short, they've got to be red or yellow. If that isn't the case, I throw the trade out. I'm not going to trade it. because I don't want to be trading when the institutions I'm trading it. Then you look for relative strength and relative weakness. Maybe you find 5 stocks that qualify here. Take the one that's got the most relative strength or the most relative weakness toward the market and use that. It's going to give you an edge over the other retail traders. You're trading the best stock of the group that you've seen. And then look to enter near support and sell near resistance. And that's the whole process. This is the whole process. And the number of traders in the university to go through a process like this is very, 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 very small. All right. So here's, again, this is the funnel method. I just put it out in writing. So when you see this, again, you can understand the key ones here is the SPY super system indicators must align in the direction of the trade. They have to. If they don't, you're not going to take the trade. You shouldn't take the trade. The stock to be traded should have daily and 5-minute charts aligned. That's important, right? They need to have the daily and 5-minute chart should be aligned. They both want to be bullish. And then relative strength over relative weakness, we've talked about that. So these are all the things we just talked about. I do mention on a 5-minute chart, the stock price should be above the VWAP if you're going long and below the VWAP if you're going short. All right, and have patience. All right, and in the room, just so you can see, these are the kind of trades that we take. We take straight calls and puts. That's most of the trades, straight calls and puts. I also do what's called straddles and strangles, and I have a video on all of these methodologies. Straddles and strangles are a non-directional trade that you're looking for just to move in a one way or another. You don't care if it goes up a lot or down a lot. You just want it to move a lot. And so the stocks that have really volatile, I think I took one the other day on Vertex, I think. Yeah, Vertex, that I took a straddle on, and it moved like $25 yesterday. So it cost me $11.80, $1,180 to get in, and I get out yesterday for about $1,900. Had to wait a couple of days to get it, but the straddle worked pretty good. So that's the straddle and strangle. I use debit spreads using weekly option expiration. In other words, if I'm taking a debit spread on a Wednesday, it's going to expire Friday. You're going to take it on a Monday, it's going to expire Friday. All right, these have been very successful on these debit spreads. Over earnings, I do take one kind of trade, and it's called a time spread. A time spread is a calendar spread. Basically, this is a non-directional trade. I don't care which way the stock goes. I just want it to stay within the particular range that the market makers are expecting. So we do time spreads over earning to capture the volatility crush. Just briefly, when a stock is going to have earnings, before the earnings come out, the market makers jack up the premiums on the puts and the calls because they don't know which way the stock's going to go, and they don't know how big a move it's going to make. So they put in this puts and calls. They price them to take advantage of that. When the earnings come out, that extra volatility that they put into the options gets drained out of there, and a time spread allows us to take advantage of that, and we take advantage and we capture the volatility crush as the earnings come out. After the earnings come out, we do that by selling a call for this week and buying a call for next week. That way, when the price drops on the call for this week because the volatility is coming out, we can buy it back cheaper, and we can sell next week's for more money than this week's, and we make money on it. We just had two really good ones this week on the time spreads. Weekly ATM, this is something I haven't been using much lately because the market hasn't allowed it. It's a neutral to bullish strategy. So we sell puts of the stock and keep a longer term dated put at a lower price to protect ourselves from it. It's a nice little strategy when the market is neutral to bullish or the stock is neutral to bullish. You can capture good premium. And we do credit spreads to capture premium. Probably most people are familiar with credit spreads. I have videos on all of these. And the only other thing that we do, now this is the SPY super system. This is the SPY super system methodology for very quick trades. This we do on the SPY, the Qs, the IWM, or the futures, the ES, the NQ. These are off the 5-minute chart. They're very quick. I can't even call them out in the room, but I do identify setups when I see them, and I have a video on how to do these. I have a lot of people that use these because you can do quite a few in a day, and you'll still be sticking with high probability trade setups. All right, but again, I can't post these, and I can't send alerts on them, but I can identify them, and you can learn them. If you've got the SPY super system, you can learn to do these yourself. Okay, and the alert service, just briefly, it's designed for day trades and short-term swing trades. It's not an investment service. Designed for traders who can't watch the market all day, and you're going to get real-time alerts on the highest probability trade setups. What does that mean? We're going to be taking all the trades by identifying when institutions are in there, when the market internals are in our favor, and then we do technical analysis to find the very best ones. Okay. All right, and this is my equity curve, recent equity curve. We had a huge July coming up. I'll show you those results, but this is typically what we do each year. This is assuming $2,000 per trade for the row. All right, and again, it goes bottom left, upper right. It's been like this for several years. All right, so we're going to talk now about using heiken ashi candles. Any questions now before I move ahead? Okay. All right, so we're going to talk about using heiken ashi candles again, using heiken ashi candles with the SPY super system. All right. Now, I'm going to explain what they are, how you identify them. This is the British pound, Japanese yen. This doesn't matter. This could be Tesla. This could be Microsoft. This could be the Qs. This could be NQ. This could be anything. Heiken ashi candles are constructed differently than regular candles. It takes two candles to make one. Heiken ashi candles that are bearish have flat tops. See this? No wick on the top, flat top, flat top, flat top, flat top. This is a bearish trend, a heiken ashi bearish trend with flat top candlesticks, and you can see how smooth that is. So every candle is going to have a flat top when it's a bearish heiken ashi candle. And notice that, by the way, that the candles from one candle to the next always starts in the middle of the previous candle. Always starts in the middle of the previous candle because they use two candles to make them. Right. So this is a heiken ashi bearish trend right here. So what we're trying to find with heiken ashi candles is the most important thing we're looking for is what's called a heiken ashi reversal. We're looking, let's say we want to go long this particular position and it's coming back and we're looking to enter it when it bounces off support. And what we want to do is identify when that's confirmed by looking at heiken ashi candles. Right, so here's bearish trend. Now see how big these candles are coming down? Now we start getting wicks and tails and green candlesticks. This is a bullish heiken ashi reversal right here. Right, this first one is a bullish heiken ashi reversal. Bullish heiken ashi candles have flat bottoms. Bearish have flat tops. Heiken ashi bullish candles have flat bottoms. Okay, no tails. But the thing that you have to be careful about, and this is a caveat to this, when you're looking for a heiken ashi reversal in a big downtrend like this, you don't want to take it when the candles that are creating the reversal are too small. This is too small compared to this size. So I wouldn't have taken this. Now it would have worked. You could have taken it here, see flat bottom, now more wicks and tails. Now we're getting wicks and tails, and then we revert back to a bearish reversal right here. But this is where we're really interested. This is what we're looking for. See these big candles coming down, a little bit of chop. See this heiken ashi reversal candle right here? That's a bullish heiken ashi reversal candle. You see the size of it? How big it is relative to these? This is our reversal for going back up into the original trend, the uptrend. This is where we would take it, right there. Heiken ashi reversal, and we get flat bottom, flat bottom. See how easy this trend is to see? Wick and a tail, right back to flat bottom again. That is your heiken ashi reversal, bullish trend right there. You can see the trend smoothly, and this is where you would get out. Now you're getting wicks and tails with a red candle. You've had some wicks and tails. You're done with it, right? You've taken it. That's your heiken ashi reversal. All right. Does that make sense to everybody? Flat tops, heiken ashi bearish candles. Flat bottoms, heiken ashi bullish candles. Okay. All right. So these are the distinction of the heiken ashi candles. They have bullish candles have flat bottoms, no tails on them. Bearish candles have flat tops. Those are true heiken ashi candles. Bullish heiken ashi reversals are identified by flat-topped heiken ashi candles followed by flat-bottomed heiken ashi candles. There can be dojis in between, but that's what you're looking for, going from a flat-top candle to a flat-bottom candle. That's a heiken ashi reversal to the bullish side. To the bearish side, heiken ashi reversals are identified flat-bottom candles followed by flat-top candles. Right? That's a bearish reversal. Okay, that's what you're looking for. And we're gonna go over some of these. Just so you know that the heiken ashi candles, this is just informational. They evolved from Japanese candlesticks. They combine open close data from the previous period with open high close low close data from the current period. And you can use these on any time frame. They work just as well. I'm going to show you some daily ones today. that would identify stocks that would be potentially swing trades starting on Monday, before you're looking at the daily chart, and then you can use it on the 5-minute chart for doing intraday trades. Okay, now, I'm not going to go through all of that, but again, understanding the trends. We've talked about this. There's your heiken ashi candles right here. This is basically what we just looked at. For example, if you were looking at this trade right here, it's coming down, and let's say this blue line was one of your support levels that you wanted to take a trade when it went through there, right? So it's coming down. We're getting chopped. Now we go through it. See how we go through it on a heiken ashi reversal candle right there? See the flat bottom right there? That would be where you would take the trade. You're breaking through the heiken ashi reversal candle right through your resistance level. It's going through, you're staying in it. You get a little red candle, but you're still above it. And then you ride it up until you start to get some indications that this trend is over. Look at how nice this trend is. Okay, these are heiken ashi, bullish heiken ashi candles all the way up. They take the noise out of it. You're not getting the noise that you get with standard candles. And you get something here, you might get a little nervous. Then you go right back to a heiken ashi candle, and then you're getting out of the position right here. Bearish heiken ashi reversal after you've been in the trend. You're done with it. You take profits, big beautiful profits right there. Okay, that's how you use heiken ashi candles. And again, these are tips for using them. This is what you would use for any type of trade. Make sure you know where support and resistance levels are. You don't want to get into a trade that's only 10 cents away from the next resistance level on the way up. You're not going to have enough room to justify a profit on that. Okay, align the trade with the market trend. Use relative strength and relative weakness. Bollinger Bands, you don't really need to worry about Bollinger Bands. That's what the pop signals on the SPY super system indicate. Those are Bollinger Bands expanding. After entering the trade, I switched to standard candles, not necessarily right afterwards. I switched to standard candles when I want to exit the trade so that I can find the reversal more quickly on standard candles than waiting for a heiken ashi once I've got profits. Okay, so again, there's the distinctions again. Bullish heiken ashi candles have flat bottoms. Bearish heiken ashi candles have flat top. One thing you remember about heiken ashi candles, this is what you want to remember. Okay, and again, reversibles we just talked about. Flat heiken ashi candles followed by flat bottom heiken ashi candles. And the other way around, bearish heiken ashi reversals, flat bottom candles followed by flat top candles. Okay, again, and the recap, the advantages of these candlesticks. They smooth out the price action without actually reducing noise. You're not going to see all the choppiness that you see on regular 5-minute candles. If you've ever been in a trade for like an intraday trade, and you get like a red candle in the middle of your uptrend, and maybe it breaks below the previous low of the previous candle, a lot of times you're going to freak out and exit the trade. But the heiken ashi candles is going to smooth things out, and I'm going to show you some of those here in just a second. Again, makes identifying trends much easier. You can see the trends very clearly. It improves identifying confirmation of trends and trend reversals. This is important. When you're going to get into a trade, you want to get in as early into the trend as possible. If you're using a heiken ashi candle on a stock that's pulling back and bouncing off a support level, if you switch to heiken ashi, the fact that that heiken ashi candle exists with a flat bottom, in other words, a bullish heiken ashi reversal off the support level, since it's made up of 2 candles, that confirms that the reversal has been confirmed. All right, the confirmation is built into the heiken ashi candles. That's why we use them so much when we're trying to get into a trade early. And again, it helps identify potential exits when the candle bodies shrink or the reversals occur. So those are your advantages of heiken ashi candle. I believe they're going to help you trading if you take them and start studying them. You can switch from regular candles to heiken ashi candles back and forth on any platform that you've got. Now this is an old chart. This is Uber, but I just want you to see this is this regular candle. I want you to look on May 1st right here. All right, this is May 1st. These are standard candles. Gap up, big move up here, right? So would I take that? I don't know, but let's look at it. What happens if I go to heiken ashi candles? May 1st. Heiken ashi candles do not have gaps. There's no gaps in heiken ashi candles. See the heiken ashi reversal candle right there in the May 1st? If you were in this trade, you see how it's coming down with bearish heiken ashi candles, followed by a doji, followed by a heiken ashi reversal to the upside, and see how big that is? The candle's bigger than this. This is where you would get in, right there. And this is where you would ride it up, and this is where you would get out. Candles start getting small, it gets red, you get out. All right, this is my TC2000 chart, by the way. This is the 8 exponential moving average, but this is where you would take it. So compare here to here, and you see what you would have captured if you get in there on May 1st. You would have captured this whole big gap up right here, just by using heiken ashi candles. All right, we're going to take a look at some here, heiken ashi candles, and I'm going to show them to you on Thinkorswim, and I'm going to show them to you on TC2000. All right, there's a couple of things we're looking for. We want to look at this. I want to look on the daily chart first here. So I want to look at the SPY. Now, if we look at SPY here, and I want to make sure these are on heiken ashi candles. Yep, these are on heiken ashi candles. All right, so here's heiken ashi candles. This is the SPY, right? You see here, we went from red here to blue here, buying, all right? And the multi-time frame was already blue, was already green. This is a bearish reversal right here, a bullish reversal right here. This is where, coming up on Monday, you basically get a bullish reversal, heiken ashi reversal on the SPY. And if it opens green on Monday, there's a good chance it's going to close higher on Monday because the movement is so good. Now, if I show it to you on TC2000, this is my TC2000 chart. You can see when these blue candles typically show up. My blue candles on TC2000, I use anything that's blue is that Bollinger Bands are expanding. Anything that's pink, Bollinger Bands are expanding. When you get a blue candle with a flat bottom, you typically get multiple blue candles in a row in a trend like this. I mean, that's just the way it is. You typically get multiple candles moving up because it's heiken ashi reversal. So this was a beautiful heiken ashi reversal on the SPY here. Remember, everybody was bearish on the market. And look what this is doing. This is a daily chart right here. Then we had this big pull down the other day on the jobs report. And now we're getting some wicks and tails, flat bottom heiken ashi candle on the SPY. So if SPY becomes a long for Monday morning, if it opens green, okay, it's that's off my TC2000 chart, and it confirms here on Thinkorswim because the SPY super system is telling me we have blue or green across the multi-time frame and current time frame momentum. That means it's bullish. All right, so that's the SPY. Take one look at another one here. Let's take a look at Google. Right, Google heiken ashi reversal candle on Google right here. Another heiken ashi reversal candle to the upside. Blue, Google becomes a buy. All right. I'm going to show you a couple more. Now here's AT&T. Now AT&T has a heiken ashi reversal candle, but look at your multi-time frame momentum right here. You see how the multi-time frame momentum is yellow, right? So I can't take that long on Monday. I can't take that until my multi-time frame momentum switches over to blue or green, all right? Because it's telling me that even though the institutions are in pretty heavily, they're not committed here across multiple days. So I'm going to wait. Right? And if I show you T on TC2000, it's going to look pretty good. All right, so here's T on TC2000. You see the flat bottom candle? So it is a heiken ashi reversal candle. So I would say, oh, that looks pretty good. But before I take it, I'm going to look at my SPY super system and say, well, it looks good. What are the institutions doing? Nope, I don't want to get in on that right now. I'm going to wait at least for another day on AT&T. So that's how I use heiken ashi candles in conjunction with the SPY super system. And here's Gilead. Gilead had a big heiken ashi reversal on Friday. This was off earnings. Yeah, this is a good long. This is a good long setup right here. Right? It may be a little extended, but it's a good long setup. You've got blue and green across the board. APP, this is another one. APP made a big move on. See, here's your heiken ashi reversal here and a continuation of it here, green across the board. Institutions are all buying this APP. You know, and something like Palantir, which has been going up like crazy, is probably fairly extended. But look at how the institutions have been buying this thing nonstop. Notice that there was green here. Price wasn't moving up but much, but the institutions were still in it, and then boom, it took off. All right, and XLK. I'll just show you one more XLK. This is a ETF. Oops. This is an ETF, the XLK ETF, which is technology sector right here. Okay, so this is the jobs report. You can see what we've done here. Here's a heiken ashi reversal candle here on the XLK. XLK, institutions are buying. They just went from selling to buying. They're buying across the multi-time frame. The trend is up. That's an excellent potential trade on XLK. to the upside right here. So again, that's another long. All right, so that kind of shows you some of the longs. Let me show you a couple of shorts. Let me show you JOBY, which has been a very strong stock lately. This JOBY. Right, so I see JOBY and I say, okay, look, it's putting in a heiken ashi reversal candle to the downside. It's bearish right there. That's a bearish move. See how the blue one's stacked? Let's go back, see if we can find any bearish ones. Can't really find too many. We had some in here. But you notice you get multiple ones in a row. So I say, okay, that looks pretty good. That goes on my list. Is it something I want to trade? What's my first thing I got to do? Are the institutions selling it right now? So I switch over to JOBY. The institutions are selling it on the current time frame daily, but they're not selling it on the multi. I do not have confirmation on the multi time frame to go short. I got to wait for this to turn yellow or red before I take it. So that means I can't take the trade. Right? It makes it fairly simple for me. Say CMG. Can we take this short? We sure can. Now this is what's called the heiken ashi continuation. We had a reversal here. Flat top candles all the way down. Then we're getting compression. Now we're getting another heiken ashi reversal. This is a heiken ashi continuation to the downside. But it sure as heck looks like a pretty good short to me for CMG. I've got it written down to take it short Monday morning, right, on CMG. And if I show it to you on my TC2000 chart, this is what you're going to see. You can see the continuation to the downside, little compression, breaking down again right here, right? So that's a nice potential short right there at CMG. And we'll do one more. I'll do IBM. IBM is short. Sure looks like a short. It's a continuation to the downside. Pulls down, moves over. Notice we're red. Everything's red. Institutions are selling. We get a heiken ashi reversal here. IBM becomes a sell. Becomes a short on Monday. All right, so that's how we find these by looking at heiken ashi reversals, and that's how you use them in your trading. You find the reversals, and then you check your multi-time frame momentum and current time frame momentum for a day trade, for a swing trade, to see if they meet the criteria, which IBM does. All right, so let's go back here. All right, so we looked at some heiken ashi candles from Friday. Now, what I'm going to do now is I'm going to go over. Hopefully you've got some information on heiken ashi candles. I'm going to go over the room results. I'm going to go through these pretty quickly, but there's a couple of things I want to point out. These are the results we've had in the room. In 2023, using $2,000 per trade, investing $2,000 in each trade in the Compass option room, which is now the SPY Super System option room, produced a profit of a little over $60,000. Pretty good. In 2024, $2,000 in each trade produced about $55,000 in profit. Pretty good. And again, a lot of the profitability is dependent upon what kind of market conditions you've got. Choppy market conditions, more difficult to make as much money. Trending market conditions, you can make more money because you can stay in trades longer. All right, so that was 2024. Now, this one I want to point out, if you remember back in April when the tariffs were put on and then they were paused and the market was just going, if the SPY was down 10% in 2 days, wiped out 10% of the SPY's value in 10 days. We were in 4 trades, only 4 trades. I had these in the room and I had these on our alert service, but these are the only 4 trades we had, 3:30, 28, and 4:1. Okay, we had AVGO, which is Broadcom short. We entered for $75 a contract. We closed for $104 a contract, 39% profit. 328 on Nike. We get in Nike for $285 a contract, closed for $9 a contract. That was a 216% gain, and that was when the tariffs went on, because Nike makes most of this stuff in Vietnam. Vietnam was going to have a 38% tariff. The stock tanked. We get out of it, and I'll show you the chart on it. We get out of that pretty immediately on the morning after that big drop down. But 216% profit is huge, probably our best trade of the year, or one of the best. We had one other one spot like that. Sarepta, we entered for $450, closed for $8 a contract, 78% profit. And we had NNE, entered for $1.80 a contract, closed for $225, 25% profit. This is more normal. But all of these were short. We were short all of these with puts. Okay, all of these we were short with puts. So that was, I'm pretty proud of this, the fact that while everybody else, retail traders were getting clobbered, because listen, I talked to a lot of retail traders, and they basically, when that tariffs went on and then came off again, they went short when they were put on. They get wiped out when they get paused because the market ripped back up again. They tried to get in long and then it reversed back down again. and they basically wiped out their accounts. I mean, I know lots of retail traders who gave up trading after that particular situation. This is all we had on. We were just following what the market was telling us. That's all we were doing. All right, so this was this past June. I was on vacation for about 2 weeks, so we didn't take a lot of trades. We had 10 wins and 1 loss, 91% win rate, 3,790 in profit in June, just to give you the most current results. This is July. July, we had this was an excellent month in July. Now notice what the percentage gains are. You notice you're not seeing 100%, 200%, 300% gains here. What you're seeing is 40, 20, 32, 52. This is typically what you're gonna see with your gains, both in the alert service and in the room. And we had 3 losses, small one here, BST. We got news against us, lost 100%. That's gonna happen. We did have Sarepta for 166%. This was another very big one that we had news overnight, and we made some nice money on that. So that was July. And July was 30 wins and 3 losses, quite a few trades. So we don't usually take as many as that, but 30 wins, 3 losses, 91% win rate, 2,000 invested in each trade, produced $16,829 in profit. And that's if you followed me into these trades, the ones that we posted and the ones we alerted on, and you put 2,000 in trade, this is about what you would have made. All right, because I'm not taking this off of my account. I'm taking this off of the trades we posted with $2,000 put into each trade, and that's what would produce. And in August right now, this is just to date. This is just 1 week for week so far. So we get 7 wins and 1 loss, 87.5% win rate. 2,000 invested each trade has produced a little over 3,000 in a week. All right, $3,118 in a week. This is early yet. We've got a couple of trades on. We've got Chewy on, which we're underwater on. We've also got a trade on. What do we still got a trade on? Roblox. We're still in Roblox long. All right. So I'm going to just kind of run through the 2024. And the reason I want to show you this is because I want you to see how consistent these percentages are on the gains that we take. Again, we're not going to get 2, 3, 4, 500%. What we're looking for is 40%, 10%, 37%. This is the kind of trades that we take, and these are the kind of gains we're going to make. All right, this is what to expect. Boeing was a good one, 96%, but 20 wins and 2 losses in January. February, 24 wins and 2 losses, 92% win rate, 11,745. This was our best. I think this was our best month last year. May, just kind of jump ahead here, but again, you can see, and I don't want to go through every single month, but you can see the percentages. Here we have time spreads. These were time spreads that we used over earnings. Had some nice time spread trades in May, because May was a month, earnings come out the end of April, 1st of May, middle of April to the 1st of May. So we had a lot of time spread trades. 15 and 2, 88% win rate, but about 5,000 in profits. June, 25 and 4, 7,500 in profits. July, 22 and 4, 85% win rate. Alerted trades, I only had a 75% win rate, but still $3,300 in profits. August, 17 and 2. August is a tough month to trade. This month will be tough. We only did 19 trades, 89% win rate, but still $4,500. It's pretty good. September, this was our losing month last year, the only losing month we had. 8 wins, 5 losses, 62% win rate, probably my lowest win rate in a couple of years. But we only lost $1,786 in the room, and we only lost $295 in the alert service. So this was September. That was our losing month. I'm going to be transparent about this. You're going to occasionally have losing months, very occasionally. You will have losing trades, but we don't very often have losing months. Then in October, we went from 1786 down in September, made 7,488 in October, jumped back up again to profit 17 and 3. And 14 and 3 in the room produced 6,063. So these are the kind of results that you're going to see. I just want you to see the percentages. I'm not going to run through every single one. If you want to look at them when you get the replay, you can. But January through April of this year, I've showed you June, July. January, 15 and 3, 84% win rate, 3,000, 89% win rate. In February, 3,800, 83% win rate. In March, 7,800, and 85% win rate. In April, 5,400. All right, so that's the results, and I want you to understand what to expect. I don't want anybody coming into the room thinking they were going to get 300, 400, 500% gains, because I know you hear that all the time on the webinars that you go to and the stuff you get mailed to you. It's just not, it's not practical, it's not sustainable. On the alert service, by the way, this is what the alert looked like. This was for Nike, the one we mentioned here on 3/28. The first alert would have said 3/28, that's the date. Nike buy the April 11th 67 puts for 285. That would have been the whole alert, just telling you what to do. Then you would get another alert the next day or days later, sell order for $9. So you would see this, you would put a sell order in, we took canceled for $9. And then when we closed the trade, they were sold for $9 on April 3rd. That shows you, that's the whole sequence of the alerts. Now, if I changed it from 9 to 9:50 or from 9 to 8:50, I'd put out another alert to give you an update on that, right? So every alert you're going to get, it's going to show the stock symbol, the option stock price, strike price, the expiration date, and the price to pay for the option. Okay. All right. And how do we get such stunning results? We pretty much covered this already. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish, bearish or bullish in our favor. So we only take trades when both of these are in our favor. For the most part, I will take trades if the institutions are in my favor and the market internals are neutral. But typically, I like to trade when the market internals are also in my favor. All right. And how do we do this? This is the key thing. The momentum that I showed you, current time frame, multiple time frame momentum. We also look at trend. There's also some calculations on money flow in there, but it's called a triple screen assessment. It's a fancy way of saying multiple time frames. All right, so again, here's the one we've already looked at. This just showed you the SPY super system. We looked at this earlier, just to identify the different indicators. We also have if you get the SPY super system, you get this template, which has these indicators on it. You also can get this template, and you can swap them back and forth. This is for stocks that you're going to just trade intraday, 5-minute chart trades, like on the SPY, the Qs, the IWM, the futures. This is what you use because the only thing we're interested in on 5-minute trades is this current time frame momentum. So that's all we put on there, along with the oscillator, the VWAP, the 15 EMA, pop out of the box signals. That's all you get. So you can get either one of these. Well, you get both of these templates, and you can use whichever one you want. So here's a SPY super system trade right here on a heiken ashi reversal. This is a 5-minute chart. This is a trade we took right here, about 12:15, as it broke down with a pop out of the box signal below the 15 EMA. Here's the VWAP, but we're coming down below the 15 EMA. So we take it here, and as long as it stays below the 15 EMA, we stay in the trade. You notice these are heiken ashi candles. Just come down. I don't even know how far down we went in this one. I just wanted to show an example, but this was obviously a big win. And again, you see where we took it right here? It was already bearish right there. All right, you could have taken it there, but this is where I took it. You could have entered it right there because it switched to yellow and it stayed below the 15. Now the super system trades, I want to just talk about these briefly. Now, this is the intraday trades because people who want to trade 5-minute charts very quickly each day. Not everybody wants to do this, but I've had so many requests for people that like this system and want to do that. You can use this as well as swing trades, but this is what we've done on the SPY super system trade. Now, I should say this is what I've done. I can't post these and I can't call them out except to tell you that it's setting up. But these are the results I've had with the SPY super system trade when I first started it last July. And you can see that the profits are tremendous. A lot of trades, 56, 6, and 2 in August. Because some of these trades only last 1 or 2 candles. So, 10 minutes and you're out. But this is pretty nice profits, 8,000, 7,000, 4,800. And with the SPY super system methodology, trading the SPY super system, you're only going to have one trade on at a time, and they'll be very short durations, and you have to watch them. Either that or just put an OCO on there for your stop and your profit. Typically, I'll get in and I'll watch them. As soon as I see it start to lose momentum, I'll get out of the trade. All right, so that was through October. Here's November and December. Pretty nice profits. Again, these are my profits. I can't tell you this is what you get because everybody has to trade these individually. So October 2024, the SPY super system produced 48.31. The room produced 74.48. These are not inclusive. This is completely separate from this. This is completely separate from this. These are 2 separate methodologies with 2 different results. They're not added together. I'm not saying this 4,800 is not included in here and this 7,400 is not included in here. Completely separate. Here's November, same thing. Nice profits, nice profits. December, nice profits, nice profits. Okay, that's the SPY super system. So again, that was the last quarter of last year. It produced about 42,000 between the 2. But you would have had it. This is the trades that I took. I can't tell you this is what you would have got, but this is what I got trading the SPY super system on the SPYs, the Qs, the IWM. This is what I got, and this is what you would have got if you traded with the room. Because these are posted, these goes out alerts. You're basically getting in roughly exactly the same time I am. All right, so we're going to show you a few SPY super system trades on here just so you can see this repeated. Again, this was the SPY super system. This was on the SPY, and we're looking only at the current time frame momentum. This is an older template before I put the momentum indicator down here. But this is where you would have got in right here, right there on that candle right there. You see it went from red selling to blue buying. You buy it here, it stays above the VWAP, you stay in it. Stays above the 15, you stay in it. You write it up, you get out right there. That was $220 per profit per contract on the SPY system, on the SPY super system on the SPY. We're not looking at multi-time frame. We're just looking at current time frame. All right. So here's the SPY super system here. This was a very quick trade. It's a heiken ashi reversal candle right there. Notice everything's red on the current time frame momentum because this is 5 minutes. This is what I'm using right there. Buy it here, get out here. That was $90 profit per contract. Right, so you can see these. I'm not going to go through every one of them, but you can see buying, selling, buy it here, buy the puts, sell the puts right there. This is on the modified layout. Same thing here with the modified layout. We go from yellow to green. We buy it right here, write it up, get out right there on the modified layout. Right, so I'm just going to zip through some of these. You can see, I just want you to see the setups. You can see here, selling to buying right there. Here, if you bought this one, you would have had to wait a bit to get profitable. It stayed above the 15, but it pulled right back. So you're just kind of waiting and waiting. And then you finally get the thing to start to move. And then you get out up here, $90 profit per contract on the IWM. Okay. Another nice one here. Again, breaking down. You see, it's all red. We already know it was red here. Multi-time, the current time for momentum was red as can be. Institutions are selling. We're waiting for this compression break. We take it right there. We write it down. $120 profit per contract, $150 per on this one. Notice it was red here, then it went blue, right? Current time frame momentum goes to buying, pops above the VWAP. You get in right there and write it up. Okay, another one here in the SPY. This was a nice one as it broke through the VWAP. One thing I wanted to point out, I put this slide in here for a reason, and that's because it went from some selling to buying right here. But notice the price stopped right at the VWAP. And then the next one did a doji on the DWAP. You would not get in here. This is where your entrance would be. When it's buying and you're breaking above the VWAP and you get a pop out of the box symbol. You don't want to take it until it's confirmed to the upside. Okay. And this was a SPY. This one I took, I pointed this out because I took it short here. Notice current time for momentum red, breaking below the VWAP. I take it short. I get out here. It goes back up again. I take it long as it goes from selling to buying as it breaks above the VWAP. I take it long here and I get out at the pivot point. So it's profitable to the downside, profitable to the upside. That's using the SPY super system. All right, so there's, again, just so you can see them here. So you can see, maybe if you just look at the chart, you can see where would I take something like this? Well, green, buying, red, yellow, selling, breaking below the 15 right there. That's where you take it, right there or right there. Okay, so that's the SPY super system. Now let's talk about some charts on swing trades and intraday trades that we've taken in the room. These are ones would be alerted on and would be called out in the room. This was a line. This was a chart when we did the end of October, end of November, July, 1st of August. Now this is a 5-minute chart on a line right here. Okay, and we did a debit spread on the line. The line had been moving down pretty hard on that day. In fact, let me show you the chart. Let me show you the chart on TC2000. All right, so this is where we took it. Here's the TC2000. This was the day we traded a line, right here. See this big huge volume coming down? All right, so that's the day we traded it. This is the trade we took, right? See, it's compressing around here about 10:30, compressing. Now it's down for the day pretty big. Then we get a pop out of the box symbol right here, and we go to buying green to selling yellow. This is where we take the trade right there. Right, and we did a debit spread on this. We did a put debit spread because the premiums were extremely expensive on these things. So I did a debit spread. We wrote this thing down for an hour, 51% profit on a debit spread in an hour on that thing. It was a Thursday. So Thursday you can make some pretty good money on debit spreads because everything expires on Friday. We had Friday expiration, but that was a 5-minute chart. You can see it turned yellow, and look at how the institutions were selling the heck out of this thing all the way across there. All right, URGN, this was another one we just had here on the July 10th. This is a daily chart. This is a swing trade. Current time frame momentum goes from selling to buying right here. So we're waiting for a compression break. We get it right here. See the candle right here? This is where we took it on this pop. Took it right here. Entered on 710. We get out on 717. Kind of to move sideways. We weren't making much money here, and then we got a pop. But we believed that it was going to go up because the institutions were buying it, even though the price was moving sideways. And then we got the pop we wanted to, and we get up for 48% profit on URGN right there. This was NVIDIA. This was one recently here. This was on 8.4. We just took this one. Now again, institutions are buying it. This is a daily chart. Institutions are buying it on multi-time frame momentum, current time frame momentum, trend is green. Institutions are all over this NVIDIA. So see this trade right here. You see this pullback? That's called a PBO, a pullback opportunity. This is when NVIDIA gapped down and stopped on the 15, and then we get a bounce the next day. That's a PBO or a pullback opportunity. Everything's green. That's the entrance. The institutions were buying it, but we were looking for the right entry. And this is where we took it right here, and we got right up, get out right here, and had a 32% profit in 3 days on that, on NVIDIA. Really nice trade. We had to wait a bit. Still a nice trade. SMR, another beauty on a daily chart. This was a swing trade right here. This was earnings. Notice the earnings was yellow. Institutions selling. Institutions go back to buying on the daily chart. And the multi-time frame momentum also is green. So they're still green here. As soon as it goes green, we buy it. We take this. We gap up and move up and take nice profits in SMR. Nike, this is the one I mentioned. This is where we took the trade. It's pretty easy to see the institutions are selling this. There really wasn't an awful lot to think about. It's just a matter of what's my entry going to be. So we took it here on this big red candle, right? So we stayed in it. In fact, some people took profits that day because they had about about $100 contract profit. But we stayed in it, and we stayed in it because it's still red. And then we got the talk on the tariffs. Tariffs are going to be imposed. Whap, right down there. This is where we got 216% on that trade. And we get out that, as soon as it gapped down, we get out. One of the rules I follow, and if you're in the room, you'll hear me say this all the time, gaps are gifts. If you're short a trade and the stock gaps down, or you're long a trade and the stock gaps up, take profits. The gaps are gifts. Think of them as a gift, because a lot of people get greedy and they think it's gapped way up. I'm going to stay in this thing. It's going to keep going. No, it's probably not. Most gaps aren't gap and goes. Most gaps are gap and chop or gap and pull back. So you take your profits early on. And there's two reasons for this. One, you've got a nice profit, and it was a gift to you. And secondly, because there was a big gap up, the premiums have been jacked up by volatility in the options that you got. So you're going to get more money on that gap up than you would if you waited an hour to get out, even if it was at the same price. You're going to get more money for it. All right, so gaps are gifts. We took it here, and that was a huge win for us. And this was Sarepta. Again, I told you we did Sarepta right here on the 28th. Took this profit, so this one has moved down. This was selling was just continuous here all the way across. Institutions selling it, not much question here. And this was HIMS. This was a nice long trade we had. Current time frame momentum, multi-time frame momentum, and the trend, all green. Institutions buying it here. I probably should have got it back here, but I got it here at 25% profit. I did leave a runner on a couple of contracts I left on that went up 269, but I don't show that in any results at all. But just something for informational purposes. All right, this was Palantir. We took this one. This was back on 10/8 last year. You can see selling, buying, buy it here, get out here, and 31% profit. Lulu, another one to the downside, gap down on earnings. We waited for it to compress. We took it here. Notice it went from blue to yellow on the multi-time frame momentum. Took it here. That was an overnight trade. We get in for $1.92, $192 a contract, out for $300 a contract. Amazon 5-minute chart. This is an intraday trade. You can do this on intradays during the day using the SPY Super System software and the SPY Super System methodology. Everything that went from yellow to green is buying. We wait for a break. We get a pop right here. We take it right here. We're in this trade for 45 minutes and we get 32%. We just notice it's following up the 15. Everything's green. The institutions, as long as the institutions are in, we're in until we get our profit. Then we're out. ENPH, another nice short. Red, institutions selling the heck out of it. Try to find the entrance right here as it breaks below the 15 with a pop symbol. Take it right here, 20% in an hour. Verizon, 50% in an hour. Very nice move in Verizon. Verizon usually doesn't move that much. See the compression, see the selling. Where do we get it? Right here as it breaks down. We get a pop out of the box, we take it here, and we're in it for an hour for 50%. This was a Tesla trade we took overnight. This moved nicely. We had a short setup the night before. We took it short. We got a lucky break. It dropped from 120 to 112. Big, huge profit. And I don't even remember how much it was, but it was a lot. $600 or $700 a contract. All right, so that's the charts. And I'm going to go over the strategies, and I'm going to go over the offer that we got. I want you to understand when I show you the offers, these are the best ones we've got, the best ones we've had. Probably not going to have them for more than another few days. But you can also, if you have any questions on them, or you'd like to maybe talk to Rory about make some adjustments to them or some other different time frames or times that you want to be in it, you can call him and come in and do that. All right, straight calls. This is straight calls and puts. This is our strategies. I've covered all of these. This is just so you'll get them when you get the replay. You'll know what the kind of trades you're gonna get. All right, so this is the offer we've got now. This is really pretty special. This was the first one here. This is a free two-week trial. You get access to my trade alerts and the trading room. All right, and you get to see the videos and all the tradings I do. After 2 weeks, you roll over to a 396 quarter. That's pretty cheap. You've seen the results we've had. 396 a quarter at a 2-week trial. This is a one-time payment for the alert service, right? So this is a lifetime one-time payment. Anything that says one time is lifetime, $24.96. But this is the one right here. To me, this is like the no-brainer of all time. This is a SPY Super. You get the SPY Super System software. What I was just showing you, the software that goes on Thinkorswim. You get the software for life. You don't have to re-up it every year. You get the license and you have it forever. You also get access to the live trading room for life. You get in the room for life. You get the bonuses, which is the master classes, the training modules, obviously, and you get access to the Discord chat, right? This is right here. It's also $24.96, but you get the software, you get the trading room, and you get my training modules, and you get access to the Discord room with 2 other professional traders. This is really, I've had a lot of people upgrade to this. Now you can, if you have any questions on doing something other than these, you can call Rory. He'll have other things that he can talk to you about, annually or something like that. But this thing is such a good deal. I just want to emphasize that. And one of the things, if you look at in the chat box here today, there's a link right there to these special offers. All right, and as I mentioned before, you've seen the results we've got. All the results we've got are based on the SPY Super System software. And I emphasize that right at the beginning of the day, by knowing when institutions are in the trades and when they're not. And that's really critical that you know that. I do want to show one other thing on this system here. There are a bunch of scans that come with them. This is a cascading up. This looks at for relative strength on the 5-minute or the daily. You can switch it back and forth. Cascading down. This is looking for relative weakness on the daily or the 5-minute. And when you click on the chart, let me switch this over to 5. When you click on the particular indicator right here, it's gonna bring you right to the chart. It's just gonna click right there and it's gonna show you the relative strength, relative weaknesses on the 5-minute. If I switch this over to a daily chart, all right, I can do the cascading up. Whoops, the cascading up daily. This is gonna change this to different stocks. So I switch this over to the daily chart and look at what it looks like. BMNR, which by the way I traded on Friday. So this is the daily chart. So you look at these and you can see how strong these things are. Now, these are heiken ashi candles we're using here. So if I switch back to regular candles, you'll be able to see it a little more clearly, right? So all you do is click on them and it's going to show you the best ones to trade, long and short, relative strength, relative weakness. That's one of the ways we look at that. There's other scans in there. There's one that shows all the breakouts, basically the pop out of the box symbols, both bullish and bearish. So there's several that you can use, and you can flip flop them back and forth. All right, so that's I did want to show you that. So anyway, so here's your specials again. Is a Frank, is a system also for NinjaTrader 8? Yeah, you can get, it's called the Money Flow Tracker on NinjaTrader 8. You'll go on there. It's not going to look the same as this does. It's going to look different, but it's using the same kind of information. It's using momentum. It's using money flow and trend. But I'm used to using this one, so that's why I use it. But if you can't get if you can't get Thinkorswim, then you can put it in on Ninja. Yeah. All right. So again, you get a link in the chat. It takes you right to a link for these. If you need to call Rory, 786-732-4656. He'll go over any other additional questions that you might have. I hope that this is the one to get, by the way. I hope that you will get some information out of the heiken ashi. When I do these webinars, I'm obviously the marketing webinars for trying to introduce our system to everybody. We got a lot of people using this system, but I'm trying to do some education, which is why I do the heiken ashi, because I know a lot of traders haven't used heiken ashi before, or maybe have, but they don't know the best way to use them. So I try to bring some value. Now I do this kind of training in the room every day. I'm in the room from market open, from about 9:15 to market close. I'm answering questions from all the members. I'm posting charts that I'm looking at. I'm posting charts that any members want to have a question on. You know, should I go along this? What's the best expiration date on this? Is this a good setup? And we post them and we go over them all. So there's ongoing education all day long to try to get you to become a better, consistent, profitable trader and being able to find high probability trade setups, because that's what we're looking for. It's going to put you head and shoulders above every other retail trader out there. So listen, I want to thank you so much for being in the room today and being in the webinar. I appreciate it. Look forward to seeing a bunch of you folks in the room or in the alert service on Monday. And have a great weekend. Have a great Saturday. We'll hopefully see a bunch of people in here on Monday. Have a good weekend.